Bitcoin and other cryptocurrencies could see a major crash after the U.S. Federal Reserve announces its interest rate decision on Wednesday, experts have warned. Bitcoin could crash by as much as $10,000 at its current rate and end up at $28,000, Forbes reported. Bitcoin and other cryptocurrencies have always been volatile assets to hold, seeing sudden crashes after a tweet from a billionaire and rallying up to all-time highs in very little time after. However, the month of May has traditionally been a strong time point for Bitcoin, as compared to the US dollar. So, the warning of a crash will come as a shock for many investors. In this video, we are going to talk about cryptocurrencies and Bitcoin crash ahead. So, let's get started. Bitcoin crash. Bitcoin is already at almost half the value it was trading at in November last year, and a further drop in its value could be heartbreaking for many. However, the crash, if it happens, would likely be due to the monetary tightening of the U.S. central bank to rein in inflation. However, according to a CoinDesk report, analyzing Bitcoin's ups and downs over the years has shown the cryptocurrency follows trends like other products in traditional finance and is as much affected by inflation and monetary policies of central banks as stock prices are. If that were true, would there be some indicators that could point towards an upcoming crash? Experts think so. Crypto crash. Bitcoin has been on a roller coaster ride of late, rising and falling sharply on the back of several news stories. But it was not the only cryptocurrency to have a tumultuous end to 2021. The price of Bitcoin and several other notable digital assets dropped heavily at the start of December. In early 2022, cryptocurrencies fell again. Bitcoin's price dropped to around $40,000 per coin towards the end of January and has sunk even lower as the year has gone on. Upcoming crypto and Bitcoin crash. Experts at Arcane Research plotted the correlation between Bitcoin prices and Nasdaq and found them to be at 0.7. The extremes of the scale were 1, meaning perfectly in sync, while -1 means prices moved in the opposite directions. The digital currency had a roller coaster ride in 2021, hitting an all-time high price of around $69,000 on November 10, 2021. But it has been on a downward trajectory throughout 2022 and now has a value of around $39,000. Why is Bitcoin so volatile? Unlike traditional types of investments such as company shares, Bitcoin has no underlying asset. Its price doesn't depend on how well a business is performing, but whether investors believe Bitcoin will rise or fall. This means that the movements in the price are based purely on speculation about how people think it will perform. As a result, there can be violent swings in the price of Bitcoin, even in the space of 24 hours. There have been several incidents that have caused the price to fluctuate. Reason why crypto and Bitcoin crash. There are many reasons why crypto, or Bitcoin, is crashing. Crypto investors taking on too much leverage. Crypto data firm CryptoQuant's BTC leverage ratio hit all-time highs in early January, meaning more investors are taking on risk in the crypto space. Just like in traditional markets, crypto investors will often use debt to finance purchases of futures. As with any asset class, Peters says, price declines could cause liquidation of long-term positions. Then, as prices drop and futures holders start liquidating their positions, prices could fall even further. It's a cycle like what happened to the stock market in 1929 and 2008. But these kinds of crashes are particularly dangerous for markets like crypto that don't have much liquidity. Cryptocurrency regulation. When China banned crypto mining in June 2021, miners had to move to other jurisdictions that were more miner-friendly, Peters says. The implications for crypto investors were that we saw a significant decline in the network hash rate. In the crypto world, a hash rate is the number of calculations that can be performed per second. These calculations are what allow the miners to produce the coins they're mining, and they affect a coin's price. When prices decline, the hash rate declines. It's been theorized that the opposite holds true, as well. This is often because miners are paid in cryptocurrency. But this also means that when governments clamp down on mining through regulations, the overall price of cryptos can decline. Crypto influencers causing volatility. When it comes to sentiment, Peters says cryptocurrency investors need to keep in mind that crypto advocates and key influencers can tweet and cause an inflow of capital. Obviously, we've seen this happen with Elon Musk's support of Dogecoin. Tweeting can have the opposite effect as well. This is due to the value of this asset class being based on investor sentiment and to crypto's lack of liquidity. For investors, a possible antidote to this problem is stable coins. Traders can use this type of coin to easily move in and out of other crypto positions as the market shifts. If you guys like the video, gives it a thumbs up and subscribe to the channel. Thanks for watching.